Hello and welcome to Business 360. I am Ashmit Kumar and here are the headlines that we're tracking this evening. Chinese markets clocked their best week in almost 16 years after the Chinese central bank announces an economic stimulus package that includes lower cash reserve requirement and 2 trillion yuan in special sovereign bonds. The blue chip CSI 300 index ends 15% higher for the week. Hong Kong's Hang Seng sees its best week over the last 26 years. The excitement over China's stimulus package is felt around the world. European markets end higher. Indian equities surge to fresh record highs in early trade, but slip into the red as profit booking kicks in. But the losses aren't enough to break a 3-week winning streak.
Any country, any customer in any country around the world, we will be shipping a Made in India solution to them.
As Cisco begins production at its first plant in India outside Chennai, global CEO Chuck Robbins says he's more excited about India's opportunities than ever before. Says the products made at India will be only manufactured here for all markets. That's an exclusive. Cisco's global CEO Chuck Robbins says Indian startups in artificial intelligence will be in the running for its $1 billion AI fund. Adds that the company is looking at M&A opportunities in India's expanding AI and security startup space. Government to release guidelines for its mega internship scheme next week. Sources say only candidates with an annual family income below 8 lakh rupees who don't have a formal job will be eligible. Add that large firms like Reliance Industries, Adani Group and Mahindra & Mahindra have already shown interest. Food aggregator platform Swiggy filed its updated papers for an IPO, aims to raise 3,750 crore rupees through a fresh issue of shares. Existing shareholders to offload 18.53 crore shares through offer for sale. Swiggy says funds will be deployed to strengthening infrastructure and growing its quick commerce business. Israel continues to bomb Lebanon despite temporary ceasefire calls by USA and France. But Israeli Prime Minister Netanyahu says Israel-Hezbollah ceasefire discussions will continue. Over 700 people have been killed in Israeli airstrikes since the start of this week. Japan's ruling party LDP elects former Defense Minister Shigeru Ishiba as its new leader. He will succeed Kishida as the next Prime Minister. The 67-year-old Ishiba secured a surprise win over the hardline nationalist Takaichi in a runoff vote. Well, let's begin with a quick look at the day's trading action. The excitement over China's stimulus package has been felt around the world. European markets closed higher, while Indian equities surged to fresh record highs in early trade. However, the benchmark slipped into the red at the end of the trade owing to profit booking, but this wasn't enough to break a 3-week winning streak. Prashant Nair is joining us now with more. Prashant, how did the markets fare this week? 3 weeks and running now.
It was a positive handover from Wall Street, but the market here has already done quite a bit. And the market on the Nifty, the Bank Nifty, broader markets quietened down and more subdued kind of close to the week. I mean, the week itself has been pretty good. This is the week where we crossed 26,000. Not just 26,000, we are ending above just under the 26,200 level. So a fair bit put on very, very quickly. Banks were the pressure point. The Nifty Bank was down a full 1% by close. Mid caps and small caps, small cuts, but nothing major at all. Oil drop was the big story, and oil marketing companies were the big gainers. I'll start with what was up on the Nifty. BPCL was by far the biggest gainer. Cipla, Sun Pharma, Coal India, Bajaj Finserv, and Reliance were some of the other top gainers today. On the downside, Power Grid, which had run up recently, Bharti, HDFC Bank, and ICICI Bank were the cuts which really came through in today's session. It was neatly 1:1 as far as advanced decline is concerned. I'll start with what was up on some of the biggest volumes. Sri Renuka Sugars was up 10%. There was Praj Industries. Ethanol was a big play today, 6% on Praj Industries. Balrampur Chini was up 7%. And there were others as well. But outside of sugar and ethanol, Sequent Scientific, 13% move, huge volumes on it. There was Exide Industries, which was up 5.5%. Again, tremendous volumes. SJVN, 6%. The QSR names like Westlife, there was PCBL, which was up sharply. Oil India, another oil name. There was NBCC, Force Motors. I mean, actually, a long list of volume-led gains is what you had in trade today. On the pullback side, JSW Energy lost about 6%. Paytm was down about 5%. I mean, the stock had almost gone to 700 levels. Ease My Trip, once again down 5. Loda, Inox Wind, Honasa, Saregama in the 4-5% range in terms of cuts. A subdued session, but great going for the market overall if you just look at the last 1 week or the last fortnight or so. Back to you.
Well, staying with the markets, Chinese markets have clocked their best week in almost 16 years on the back of the economic stimulus measures announced by the central bank. The blue chip CSI 300 index has closed 15% higher for this week, while Hong Kong's Hang Seng saw its best week in over 26 years. Speaking to CNBC, president and founder of Appaloosa, David Tepper, has said that he's investing heavily in China as the stimulus measures would be incredible for the country.
Just Alibaba, or are you talking
Everything.
JD, Baidu, PDB,
Everything.
the two Chinese ETFs, everything China?
Everything. ETF, you know, how we do futures, right? Everything. Everything. Listen, a long time ago, in 2010, I think I said everything.
And you would say
I remember when you said
and
everything.
you know what was, you know what's good?
You were right.
Everything. Okay? So if they, you know, this is incredible stuff for that place, okay? So it's everything.
Well, sugar prices rise to a 7-month high due to the ongoing drought condition in Brazil, which is the largest sugar producer in the world. Prices also rallied after India's food minister Prahlad Joshi said that the government is considering increasing ethanol prices for 2024-25 season, along with a review of the minimum selling price of sugar and sugar exports for the same period. Sugar stocks like Sri Renuka, Balrampur Chini surged in trade following these developments. Well, here's a CNBC-TV18 exclusive. Cisco's global CEO Chuck Robbins has said that he's more excited about India's opportunities than ever before as the company inaugurates its first manufacturing facility in the country in Chennai. Speaking exclusively to Shireen Bhan, he added that India was poised to become Cisco's key market for domestic growth as well as exports. Robin also added that Cisco was eyeing M&A opportunities in the nation's expanding AI and security startup space.
Chuck, we spoke about the manufacturing facility in Tamil Nadu when you announced the decision to go ahead with that, and today you inaugurated the facility just a few hours ago. You know, take us through what the journey from start to operationalizing has meant for you.
I have to say the most rewarding part of walking through the factory today and touring it, we're seeing that the humans who are working in it, where we've created these jobs, it really is fascinating. It's phenomenal. Seeing the products that we're building here and thinking about the future and everything that we can do here, it's just very exciting. But the teams have done a good job getting us to this point. We're excited about it. We're obviously going to use this both domestically and for an export hub. So we think there's a bright future and a lot of runway here.
2025 going to be a big year for M&A as well?
We're very happy with the Splunk acquisition. You know, if you think about it in a nutshell, to be a great networking company, you have to be a great security company. To be a great security company, you're going to have to be a great AI company. And to be a great AI company, you're going to have to be a great data company. And we are the only company in the world that has all four of those. And so we think that we're well positioned. And we think that if we need other assets to actually continue to build on those capabilities, then we'll make those decisions as necessary.
Well, Chuck, you know, potential for India from an M&A point of view, you talked about data, you talked about security, and we've got a bunch of startups operating in that space. Is there anything exciting on that front from an India perspective?
The exciting thing on the startup front in India is that it's expanding rapidly, and there is a lot of focus on the very areas that are important to us. If my memory serves me correctly, I think we've made 5 acquisitions here. And we launched a $1 billion AI fund to actually invest in AI startups. And I would suspect that there'll be lots of opportunities here in India to not only invest, but potentially acquire when it makes sense.
Well, on to another CNBC-TV18 exclusive. The corporate ministry is expected to roll out guidelines for the center's internship program within the next week. Sources have told CNBC-TV18 that the major corporate players, including the likes of Reliance, Adani Group and Mahindra, are already on board. Shivani Bajaj joins us now with the details. Shivani, take us through the eligibility norms.
Well, yes, sources have told CNBC-TV18 that the Ministry of Corporate Affairs is likely to release guidelines for the centre's new internship scheme within a week, with the dedicated portal expected to go live around the same time. Sources suggest that major companies like Reliance Industries, Adani Group and Mahindra have already shown interest in joining the program. As per the likely eligibility norms, we know that the interns need to be between 21 to 24 years old, but sources suggest that the guidelines also mandate that the family income of the applicants should be under 8 lakh rupees annually. This family income includes income from the candidate's parents as well as spouse. Now, another likely eligibility norm is that candidates shouldn't be pursuing any formal degree or a formal job, though online courses or vocational training will still qualify them for the internship program. On the industry side, government is likely to allow companies to engage interns across their supply chain and as well as their group companies. But the certification of the internship will have to come from the main company. This, sources say, is to keep the corporates invested in the progress of the interns, and with this the MCA is also asking corporates that all the roles given to these interns should be skill based, not menial at all. Sources say that training costs are likely to be covered by CSR funds. Now, there is no upper limit or cap as on how much the corporates would spend on training the interns, so the money can be utilized from the CSR fund. Apart from this, a monthly stipend of 500 rupees will be given to the interns from the CSR fund and 4,500, as we know, from the government, totaling to a 5,000 rupees per intern per month. The government will also provide, as we know, one-time additional time payment of 6,000 rupees to the interns. Now, the internship portal that will also go live in a week is likely to match candidate skills with the corporate needs, automatically generating CVs and sharing them with the corporate HR teams. The portal will also offer a multilingual call center support to help applicants navigate the process. This program, as announced in the 2024 budget, aims to boost youth employment by addressing India's skill gap. Back to you.
Right, Shivani, thanks a lot for that. Now, food aggregator platform Swiggy has filed its updated papers for an IPO. The company aims to raise 3,750 crore rupees via fresh issuance. Existing shareholders will offload 18.53 crore shares through offer for sale. The company has said that these funds will be deployed for strengthening infrastructure and growing its quick commerce business. And GQG Partners has agreed to pay $500,000 to settle charges with the U.S. Securities and Exchange Commission, the SEC. This settlement is pertaining to the alleged violations of whistleblower protection rules. According to the SEC, between November 2020 and September of 2023, GQG Partners made 12 people sign an NDA or a non-disclosure agreement that restricted them from disclosing confidential information. More than 22 lakh shares or 6.2% equity of Nuvama Wealth Management changed hands in block deals today. Edelweiss Group Chairman Rashesh Shah confirmed selling less than half of their stake in Nuvama, saying that the company wants to be asset light and low debt. Well, here's a CNBC-TV18 exclusive. Solar manufacturing company Waaree Renewable Tech is looking to acquire Italian power company Enel's India arm. This comes as Waaree Renewable Tech's parent company, that's Waaree Energies, eyes a listing on Dalal Street. Rachna Dhanrajani is joining us with more. Rachna, tell us, what are you picking up?
Right, what we've learned from our sources is that Waaree Renewable Tech, which is the listed arm of the IPO-bound Waaree Energies, is looking to acquire Enel India's renewable energy business. Now, Enel is an Italian group, and their India business is the Enel India Green Power Company that's been on sale. It comprises of a portfolio that has 760 megawatt peak operational assets consisting of both solar as well as wind assets. Now, Waaree Renewable Tech, which is the listed company, has been focused on solar EPC, which is engineering, procurement and construction. They have emerged as market leaders in that particular segment, which is why now the focus has shifted to become an IPP, which is an independent power producing platform, and hence the acquisition is being considered. What we've also learned from our sources is that through this acquisition, Waaree wants to foray into IPP if this transaction moves forward. But they're not the only ones competing for Enel's India stake. There's also JSW Energy. We did write to Waaree, but we haven't received a response yet from them.
Now, Israel has rejected global calls for a 21-day ceasefire with Hezbollah as it continued attacks on southern Lebanon. Prime Minister Netanyahu has vowed that Israeli military would continue to bombard Hezbollah targets indefinitely. According to Lebanese officials, Israeli airstrikes have killed nearly 700 people in the region so far. Israeli defense forces have claimed to have hit 220 Hezbollah targets. Officials also said that strikes on suburban areas of Beirut have killed head of the militant group's drone unit. Meanwhile, Israel has claimed that Hezbollah launched rockets towards Haifa and its surroundings in northern Israel. Israeli Prime Minister Netanyahu also said that the country will continue to target Hezbollah with full force.
My policy, our policy is clear. We are continuing to hit Hezbollah with full force, and we will not stop until we achieve all our goals. First and foremost, returning the residents of the north safely to their homes.
Meanwhile, Palestinian President Mahmoud Abbas has criticized the Joe Biden-led administration for providing diplomatic support to Israel despite the mounting death toll in Gaza. In his address at the UN General Assembly, Mahmoud urged the international community to stop supplying weapons to Israel and also laid out a 12-point roadmap for post-war management. More than 41,000 people have been killed in Gaza since the war began in October 2023. Well, with that, it's time now for a short break. But coming up, quick commerce has changed the way people shop. How will this impact Kirana stores? A special report coming up. Welcome back. Now, quick commerce has changed the way people shop. The convenience it offers is increasingly making old-school convenience stores or Kirana stores redundant. In the second part of CNBC-TV18 series, Think It, Buy It, CNBC-TV18 Shilpa Rani Petto reports that many of India's 30 million Kirana stores are struggling to stay alive.
India's consumers are an impatient lot, and India's ubiquitous neighborhood Kirana stores are losing business. First, quick commerce platforms took away the forgetful or absent-minded customer who popped into stores for some last-minute purchases. And now increasingly, even the regulars who drop by once a week or once a month for their planned purchases are choosing to let their fingers do the walking. Reports suggest the rapid rise of quick commerce platforms has taken away 25 to 30% of the business Kirana stores could boast, and industry bodies claim nearly 25% of India's 30 million Kirana stores are on the verge of shutting shop.
When these competitors have entered, so now what has happened is customers' mindset and customer itself has the habit, the practice of them ordering grocery has changed completely. So what has happened, even if they want to order say 200 rupee item or 300 rupee item, they want quick delivery. And this is the habit which is what where we are facing a big competition.
Over the last 2 years, these Kirana stores have seen a significant negative impact because of quick commerce platforms, where there's impulse buying for certain kind of products. Those are things which are bought from the Kirana stores, or probably somebody would go and pick them up. But I think because of the convenience that quick commerce offers, this is kind of hampered growth for Kirana stores in the metro cities. And if at all quick commerce scales up beyond the metro cities, they go to tier 2 and tier 3 markets, and if at all they're able to attain success there as well, you will see a bigger negative impact for Kirana stores as a whole.
It's not just the ease of ordering and the speed of delivery that has worked in Q-commerce's favor. It's the discounts on offer which Kirana stores are unable to match. For Kirana stores, costs are also mounting. The margins offered by FMCG manufacturers has dropped to 10 to 12%, lower than the 18 to 20% they got before the COVID-19 pandemic. Establishment costs and stock holding costs are also rising, something Q-commerce platforms are able to offset with scale.
The profit margin of a Kirana store is not more than 5 to 10% or 15% to the max. One primary concern and issue what we are thinking is that increasing control of quick commerce platform over their products on distribution. In a primary case, in many cases, a single platform assumes full control over sales and distribution of a product.
The All India Consumer Products Distribution Association has filed a complaint with the Commerce Ministry raising concerns over the threat of quick commerce and alleging a host of missteps, including violation of FDI norms. Some Kirana stores, meanwhile, have chosen to innovate and try to fight for survival. These range from trying to connect with consumers via WhatsApp to sprucing up their stores and widening products on offer to integrating billing and back-end systems using technology.
We have also tried to slowly, gradually change our modules. पहले ये हमारी store was always an offline store. Since now we have also started little bit of online. If you have seen the traditional store, what in olden times it used to be, उसके हिसाब से आज आप देखेंगे तो store are more brighter. The displays have changed. What I see that people who requires a personal service will definitely come to the stores.
But these innovations come with costs attached, and it's not something every store is able to afford. So while Kirana stores try to put their head above the water, they're hoping that familiarity, trust and the need for touch and feel will keep bringing the regular customers to their stores, and that will help keep the lights on for now. But they say that without government intervention, which could be in the form of protectionist policies or easier access to funding for tech upgradation, long-term survival is still not in the basket. In Mumbai, Shilpa Rani Peta.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV 18.